Welcome to the weekly macro outlook, and very exciting week because we're going to at the CPI and of course the European Central Bank monetary um, policy, and how it's going to affect the market this week. So it's just really how to see what's going on, what happened last week, and what's in for us this week. Last week was quite exciting. We had our first ever NFP news that really, really shocked the market. Seeing pair like Euro USD and Pound USD dropping over 150 pips. For the very first time in 2026, we are seeing headline news, making sense. For over time, we've seen headline news like NFP, and all of that not really moving the market. So folks just like, you know what, we're no longer interested. Okay. And for the very first time, we're seeing NFP, doing its thing like VD NFP. You get so that tells us that market is back to paying attention to economic data, paying attention to red folder, and largely because we are markets anticipating a new fresh wine, economic fresh ideas, forward guidance in the market from especially from the new Federal Reserve Central Bank, no other person than Kevin Warsh. So I think that's one of the reasons why that headline made sense. Okay, now Poor is out of the way. We're having a new guy, and of course, market will respond to that, of course. So this week, we're going to look at what's market is going to happen from 8th to 12th June. And particularly, let's look at what we have as our regime. Everything we look at from here, start from the regime. Our regime, which gives us the idea of our direction, higher for longer under pressure. So it means that this higher for longer means two things. We're looking at inflation being on the picture. We're looking at strong job reports being on the picture. And of course, going to the week, we're seeing CPI coming in. All right. So the higher for longer under pressure simply tells us that could it be higher for longer for a very long time, or will it be short-lived, or what could it be really? Taking into condition that we're going to get US CPI inflation report on Wednesday. So our primary driver this week is US CPI and ECB policy decision. That's our primary driver. We're expecting that to be what could give us that volatility for the week. Then the key risk, what could affect the market to go the other way around, is market underestimating inflation persistent, while overestimating growth deterioration. So partially that's what markets will play around this week. So we have a regime saying that inflation, the central bank or Federal Reserve is going to hold rate for the longer time. We're not looking at cutting the rate any longer. How hawkish could it be, really? How hawkish could the market price DSY? And could US CPI on Wednesday validate that higher for longer narrative? Haven't seen that the labor market has done so. So we have a lot of questions. We have quite a number of questions the market want to get answers from, and we'll see that this week. Of course, we'll be here to break down things for you guys and all of that. So let's dive into the slide. We'll have 11 slides, and we hope to make it very summarize as much as I can, okay? But don't be too in a hurry to get all the information quickly, digest it, see what you can do and how you can go about this, okay? Then we have, so let's see the next slide. Okay, that will be week in contest. Last week, NFP changed the narrative. We have a very strong labor data report, and you could see how that pushed the market. Okay, pushed the market. The yield was up there. DSY was up there. Euro USD and Pound USD all tanked and all of that. So just because of the change we had from NFP. So if you've seen our last week report outlook, rather, you saw that we stressed on NFP could be the trigger. And of course, it became the trigger for last week. So this week, we're seeing CPI on the table again. We're seeing CPI, a very valid regime change data on the table again. So what NFP last week told the market is what the market was this, what the market expected. Lower oil would weaken inflation, slowing GDP would eventually pressure the Fed. USD upside was becoming exhausted. Now, what actually happened? US labor remained remarkably resilient. Economic slowing down, but not fast enough for Fed pivot. Higher for longer remains the dominant regime, right? So what does this mean? The key message from NFP was, all right, this leaves the market. So you can see the key message from NFP: the U.S. economy is slowing, but not slowing enough, uh, to force the Fed into a dovish pivot. So of course, the data was not expecting Fed to be dovish. The NFP report removed anything that has to do with dovish narrative all from the market. So the market goes into the week with growth slowing, not too slow, because I think we had about 1.6% on growth, right? So labor is very resilient, inflation is elevated. Oil is a little bit soft, geopolitical is easing, right? However, data is saying the same thing, different thing. All right. So this week NFP, this week CPI and ECB meeting will determine which side wins, right? Like I said, we have the CPI, we have the ECB, and all of that. So let's see what the alignment is really talking about. The weekly regime alignment. The monthly regime alignment, of course, clearly was inflation persistent, and we're seeing inflation being on the talk. Okay. Weekly aligned confirmation week. We expect the euro confirmation week. Market pricing higher for longer is delayed calls. So this higher for longer and delayed calls, keeps USD supportive to the upside. What must happen? What must really happen? CPI confirms or reject the inflation persistence. So if we see the CPI number coming very hot, then of course the higher for longer narrative becomes the regime of the day. And of course, we'll now go into the phase of would Fed hike? Will Fed hike or will they hold? That could be the narrative, going into the week, going into July, especially. All right. And we want to see that coming in, printing into the data. So I think that going into July really is going to be very interesting for me. I'm not kidding, because going forward, we're going to see the US economic data. In fact, across the board, we'll begin to see economic data start to make sense, start to become the primary driver of the market. News like CPI will become the primary driver. NFP, ICM and stuff like that, becomes the primary driver, for the market. And it could be very interesting to see, really. It could be very interesting to see. I haven't seen that NFP this week has done its thing. So Australia is going to kill the market. So let's see top slide. Let's see what we'll have for the week. The event we'll have for the week, particularly US CPI and the core CPI. The US CPI is forecasted at 4.2, and that's a lot of numbers. That's a lot of numbers. Okay. So if last data was 3.8, which shows that inflation was on the board. Now, if we have another 4.2, if CPI should come out at 4.2, that will be very, very hot, because that will confirm that inflation is now on the card for central banks to really deal with. Okay. And being that is what Kevin Warsh is going to talk about, market is going to look at what Kevin Warsh sees on the service inflation, energy inflation, and inflation across the board. What does it really mean? And that could be very interesting data to see on Wednesday, 8:30 a.m. Eastern time. And the market really want to see what that could be, really. Okay, and how market will respond to that. Our core CPI, which removes volatile items like energy and all of that, we're seeing at 2.9 from 2.8. This is already telling us that core CPI is also, accelerating, and that could, bring in more hawkish scenario into the market. The ECB rate decision, very key. We're seeing ECB hiking rates, but that's not the case. If ECB is hiking rates, is it just one off? Is it going to be continuous? What could it be like? What's the scenario? What is the framework ECB is going to go by to hike rates and, of course, maintain their monetary policy? So, we want to see not just the headline of the hiking of rates, what that guidance look like. So, two things I'm expecting from ECB is to tell us, is this hiking of rates just one off, or should the markets expect more rate hike? All right. Should the market expect more rate hike? And at what momentum, really? So if ECB should tell us, okay, this is just one off, we're not going to do anything about rate hike again, that could be a dovish, guidance. But if ECB should tell us, okay, we're going to still look at the market. So if we see anything like more of inflation creeping into the market, especially service inflation, we may likely want to hike rate. Okay, that will be a guidance, that will be a hawkish guidance, really. And market wants to now pay attention to incoming data from the euro area, especially for the inflation report and all of that. So the guidance matter a lot for on Thursday ECB decision, most especially from the press conference. So we'll get to see what the press conference will be, how it's going to sound, and what market participants will pick from that narrative, really. So that is that. So let's look at do we have, sorry, okay, let's look at our focus points. Our focus points largely going to be on CPI. There's no two things. Our focus point is going to be on CPI and ECB and ECB monetary policy. And we want to see what could the yield look like? What should the bond market how would the bond market respond? And what should we look at in terms of CPI and ECB? So pay attention to this part. Now, our focus point one, CPI is the most important report since PCE. So if CPI softens, what should the market do? What should we react? So it will be on lower inflation, lower oil inflation validated. All right. Easing inflation fears confirmed. Yield compresses further. USD weakens, and both Euro USD and Pound USD recovers. But if CPI comes out hot, which is what we're expecting really from our analysis, is that hike discussion revived, higher for longer repricing accelerates further, yield will rise and USD will strengthen, both pairs will decline. But that is both Euro USD and Pound USD is going to decline. Market already knows that the US labor data is resilient enough. It's already priced in. We've seen that. Can CPI Wednesday give us that? Give us that shit, really. Can CPI Wednesday be that guy for us? Honestly, if CPI Wednesday will give us that, then we're in for something good. We're in for something good. Focus point two be on ECB. Yeah, what is it really ECB is going to look? I want to talk about ECB. ECB is going to look at inflation. Inflation is rising, of course, confirmed. Service inflation is also rising, but ECB is facing growth and manufacturing constraint. So if that is the case, markets wouldn't expect ECB to aggressively hike rates. So that caps ECB hawkish scenario, keeping Euro USD vulnerable to the downside and capped to the upside. So we just want to see more guidance from the European Central Bank, and we'll guard it with other economic data we have at hand. Of course, those that are yet to be released. So that is what we have on our focus point one and focus point two. Our focus point three just really on Iran risk. And for me, I don't think the risk is Iran-US war has a lot of market interest at the moment. The risk is gradually disappearing, easing, so it has become a tail risk. Of course, we'll keep on looking forward to what is happening there and how market will interpret it. But for now, market is slowly moving away from the US-Iran talk and going into proper economic data, which of course that's the case. So our yield matrix reaction, our 2-year yield matrix reaction is the key, right? That is where we want to see what's going on. All right. So if let me get my pen and see what's going on. If hot CPI, if we have hot CPI, then we expect higher yield. We expect USD to be bullish, and we expect Euro USD to be bearish. All right. We expect bearish Euro USD and bearish pound USD. So if we have hot CPI, this will be the case, which of course that's what we're looking at. That's what we're looking at for that to be the case. But if we have in line or near 3.6, then this could be stable, this could be neutral, and the markets will largely range. All right. So if we have a soft CPI, then the yield would be lower, USD will be bearish, and we have bullish Euro USD and bearish bullish Euro USD and bullish pound USD. If we have hawkish ECB, then we'll see Euro 2-year yield up there. Euro will be positive. This will be bullish, and this will be neutral. All right. So, but if we see ECB peak, sell the news, then Euro yield will fade. This will be neutral. This will be bearish, and this will be neutral. Just for ECB scenario, really. Okay. So that's what we have for the 2-year yield, the year yield matrix for the week. So what I want us to look at is our scenario matrix. Our scenario matrix is one of our key important components in our weekly macro outlook and how we want to see things play out. So it's very important we look at this. So for our scenario matrix, which we build from the ground up by using our own economic data. We're pricing a 45% probability that inflation will be sticky. All right. We're pricing a 45% probability that inflation will be sticky. And if that's the case, we expect the bearish momentum of Euro USD and Pound USD, to continue. Then we're going to see a higher yield. Okay, so the macro outcome will be that CPI remains elevated and inflation persistence confirmed, higher for longer, fully priced. Soft landing, if CPI cools a little bit to 3.6, no escalation, ECB hikes but stays data dependent. This will be stable. This will range all through. Then this is 35% we're giving to this. This inflation returns is 20%. So we're not really seeing inflation to return into the market for now. So the two things that has much percentage to happen is either we see a soft landing from CPI or a sticky inflation confirmed, which is our base case really, which is our base case. So we have it for the 5% allocated to that guy, and we're expecting that to play out. Then we have our outlook. Our outlook for Euro USD is landing neutral. Why we are bearish, we're neutral because we want to see what CPI will do. We want to see what Euro ECB policy will look like. So we're largely a little bit neutral on Euro USD, but we are largely still, on the sell side as well. So you could just read this up and see our key additional level and see what's going on. Our trigger framework is soft CPI on Wednesday, ECB, hawkish ECB, hot CPI on Wednesday, and US 2-year yield above 4%. So these are just our trigger framework. Whatever happens, if we see hot CPI, euro will be bearish. If then USD will be up above 4%, a soft CPI, then euro will be higher. Hawkish ECB will confirm a more higher price for euro USD. So for pound USD as well, we're neutral to bearish. We're bearish on euro pound USD. See what our guy will do next week, and if you go to the market and look at for the resistance, our pivot level, and our support level, and all of that. UK quite bearish on that too. I don't really like looking at per outlook. Yeah, I don't really stress on it because, yeah, it's just like an outlook. We gauge on it as we go, really. Okay, so let's look at best weekly expression. So we're looking at Euro USD, Pound USD to sell, really. Invalidation triggers, neutral Euro USD if invalidated if she breaks above 4.10 on odd CPI print, then in neutral will become bearish. Then if soft CPI plus falling yield removing the US supportive thesis. So if we see this, our neutral Euro USD will be invalidated if the 3 yield breaks above this, and that will be largely supported by CPI prints. Then if we see soft CPI, then Euro USD bearish scenario will become bullish. So our risk to the outlook, very important data. Our primary risk is CPI. Our primary risk this week is CPI. So all CPI revives Fed hike discussion more, right? And pound USD is going to decline more aggressively. Euro is going to decline as well, aggressively as well. Our secondary risk is ECB surprising us with a hawkish forward guidance, which a hawk continuation signal sends euro yield sharply higher. Euro USD rallies aggressively, even if US CPI is neutral. So we need to see what ECB will do, but I don't really know. I don't really think ECB will be that hawkish. I don't know if they will be hawkish. But I do know they'll be data dependent. Yeah, they will want to see more data dependent. So going into July, we want to see how inflation data responds from the euro area. And that was what we used to build on our narrative going into the week and the rest of the month. All right. So that's what we have for the week. So on Wednesday, look out for the CPI data. On Thursday, look out for the ECB rate decision. On Friday, we look out for the University of Michigan inflation expectation. This will be our guide, our macro guide for the week. So a quick recap: higher for longer is our regime. Our primary driver is US CPI and ECB policy. The week in context remains that the US labor market is resilient enough and continue to keep the regime in check, which is the higher for longer narrative. We have US CPI and ECB rate decision as our key economic data or economic event for the week. We have CPI as our major focus for the week, and ECB as our sub focus, for the week. And the Iran-US risk has become a tail risk, so market's not really going to pay attention to that much. Our yield matrix is already telling us that what we should expect on each outcome of the US CPI reports. Our scenario matrix clearly is staying on sticky inflation, so keeps Euro USD and Pound USD largely on the downside. If that is the case, our outlook keeps Euro USD on neutral, but still bearish. Pound USD still bearish. Our best weekly expression is we're seeing Euro USD still going to the downside. Our risk to the outlook is if we have hot CPI, then we'll start talking about could the Fed possibly hike rates, and the secondary risk is how much hawkish or should we expect from the ECB rate decision on Thursday? So it's a very exciting week, very, very exciting week. So do well to, read through, digest this report, outlook, and use it for yourself to make an informed decision. This is just particularly plainly for educational purpose, not for any reason to use as a financial advice. So in our next video, we're going to touch on the technical analysis aspect and see what we could build up on the chart, using the report. So guys, take care of yourself. Share this video to the other to your community. Like, comment, subscribe, and be part of this journey. Thank you.